In the meantime, next, I am thrilled to welcome Doug McWilliams to the stage. Douglas is the Deputy Chairman and founder of the Center of Economics and Business Research. And today he's going to give you a snapshot of the economic outlook in the UK specifically and what that means for your rebate strategy. Please welcome Doug to the stage.
Thank you so much. Thank you so much. I'm a boring economist. Not that there is any other kind. And I'm meant to have a clicker, and someone's about to give it to me. Because without a clicker, my ability to, I once worked for IBM, so I can't talk without slides. And I don't know what to say, because all my prompts come from there. I was once speaking in China, and right at the very last minute, the representative of the Communist Party that sat on my host's committee decided that my slides should all be translated into Chinese. And so I looked to see what it was I was saying and discovered that I was going to learn in Chinese. So that was a challenge. My wife, who was in the audience, says, "I'll never forget the look on your face when you saw it all written in Chinese." I'm going to update you on trends, which is quite fun because the trends have been changing. We had the budget in the UK last week, and then we had the election in the US this week. I prepared 3 sets of slides for the US election. Trump, Harris, and don't know. And I wondered whether I should do one about they're all fighting or something like that, but decided I wouldn't try that one on. So it's been a bit of fun. And then there's time for questions. I'll speak for about 30 minutes and then take questions. I'll talk about the US and EMEA excluding the UK and Ireland. I'll say a little bit more specifically about the UK and Ireland, since quite a lot of you are associated with those parts of the world, and then a bit about the deeper trends. Let's start with the election. This is the first slide. I actually produced it before the other two. And at one point I thought, can I get away with only this one? And I thought, better be careful. The markets had expected Trump to win, as did the betting markets. But nevertheless, the dollar definitely moved and bond yields definitely moved after the election result became known. But I would say that Trump was more priced in than Harris. The biggest economic news, and I'm not going to talk about the politics, there are plenty of other people who are more skilled about talking about that than I am. The economic news, the main bit of economic news is going to be tariffs. He's promised tariffs of at least 20% on most imports, going up to potentially 80% on Chinese imports. So that's not great news for people who are expecting to sell into the United States. What I would say, however, is it's very hard to apply tariffs either to services or to software or things sent down telephone wires. Tariffs are easy to apply to goods that are physical and have to be sort of carried in. But things that are less physical, I mean, there are ways of taxing them, but they're much more difficult ways. And I think the bulk of the tariffs, which are aimed at protecting manufacturing jobs anyway, will be applied to goods. So there may be a way around it. He'll obviously have his views about Ukraine. Trump doesn't like spending on overseas wars. He particularly doesn't like paying for the defense of Europe. He thinks Europeans should pay for their own defense. And he has made it known that he thinks that the US should not be spending so much on fighting Russia in Ukraine. So I think there'll be a lot of pressure for a settlement in Ukraine. He may say there's a surge of money, you spend it, but after that you're on your own, mate, leaving it to the Europeans to finance Ukraine or Ukraine to make a settlement. I can't predict exactly what will come about, but I think that war fatigue must be starting to dig in a bit in Ukraine. So we'll see what happens there. Middle East, Trump has been associated with support for Israel and trying to get the Israelis to do deals with the Saudis, with the UAE, and to a certain extent with Qatar. And I think that Trump will probably be more on the Israeli side than the Palestinian side in the Middle East war. He's certainly not very keen on Iran. But again, he's not keen on getting involved in overseas wars. He's more like a sort of 1920s isolationist American. And I think, therefore, the Israelis who are expecting blank checks may find that they don't quite get it. Not great news for Europe, because we're likely to get caught, and Europe includes the UK for this purpose, because we're likely to get caught by the tariffs, and we're likely to have to spend more on our own defense. I doubt if Trump is going to push very hard on net zero. Migrants aren't going to find it easy, particularly those who are undocumented. And one of the interesting things is that there is a plan massively to cut federal spending. Elon Musk is in charge of this. He cut the staff in Twitter by 80%, so he claims, when he took over. He thinks he can do the same with the federal bureaucracy. Well, I say good luck to him, but anyone trying to cut bureaucracies finds that bureaucracies are ways of fighting back. They cut spending. I used to advise the Royal Navy. They cut spending in the Royal Navy in the UK. Now, at the time of Nelson, we had over 1,000 ships and 5 admirals. We now have 30 ships and 35 admirals. So the bureaucracy resists being cut. I don't know what they do, these 5 extra admirals, whether they sweep the deck or whether they... I think we've got past them putting up the sails, but I mean, bureaucracies are very resistant to being cut. But if he can do it, it would be interesting. And by the way, it will send a message to those of us who've failed to do so, that there are opportunities that we thought were not there. But let's see if he does it first. He also plans to make permanent the cuts in income tax and corporate tax that he introduced that were meant to go away next year. So that will change. Now, the first interesting thing about the US is their monetary growth. Now, this is a rather interesting chart. You can see the peak. At the time of COVID, they absolutely printed money like crazy. They increased the US money supply by 20%. By the way, great to take pictures, and no ban on you doing so. But if you want a full copy of the slides, Rachel has them, and I've got absolutely no problem with you having a full deck of slides. Don't think you can sell them to anyone else, because economics goes out of date so fast that you really don't want to get caught trying to sell an outdated economic forecast. But you're really very welcome, and I don't even mind if you use them. So don't feel you need to keep on doing that. If you want to, I don't have any problems with people taking photographs, obviously, but just to save you the effort. 20% in a month. It's never happened before. It's amazing. And that was the sort of COVID peak. And after that, they've been trying to hoover it back in. And we've seen nearly 18 months of negative monetary growth in the US. And if you look at what's been happening to price inflation, well, we actually found that when they printed all the money, prices went up. And when they took it out of circulation, price inflation came down again. Now, the problem is that prices, except in some of the commodity markets, haven't gone sufficiently negative to bring down overall inflation. Overall inflation is now running at about 2% in both the UK and the US. But at any rate, prices aren't going up anything like as fast as they were. We've now got back to positive monetary growth, and I think we'll get back to positive economic growth in the future. One of the ways in which this will happen is falling interest rates. And as you can see from the chart, we're expecting a fall in the Fed funds rate. Although it's very interesting that medium-term borrowing, 5 years and going up in the yield curve, has strengthened. The yields have gone up since Trump got elected. The biggest single economic problem worldwide is the scale of government deficits and debt. This chart shows the deficits as a percentage of GDP. And the key thing for the US is that it has been persistently running at 5% plus. It's forecast to dip a little bit, but it's not forecast to dip an awful lot. In the UK, it's expected to come down a bit. Japan is expected to move into surplus eventually. Germany, it's sort of non-existent, really. If you look at what's happening to government debt, which is the total of the deficits accumulated over the years, what you can see is how the US debt as a percentage of GDP is now getting bigger than GDP. By 2030, it's expected to be bigger than it was at the end of World War II. Now, if the federal government were to go bust, they would be the biggest single entity ever to do so. But it's the conflict between the irresistible force and the immovable object. The thing is that if someone is heavily in debt, someone else has to be heavily in surplus. And the people who are in surplus have to put their money somewhere. So it's not a done deal that the US will go bust just because the debt keeps on rising as a percentage of GDP. However, it's something that will probably create increasing nervousness, and it will mean that the cost of money will stay high if we're lucky. And if we're unlucky, then there'll be a run on, first of all, the US government, and then every other government, and you can see the list down there, every other government that's heavily in debt. And you don't really want to be the slowest ship in the convoy when that kind of run is taking place. So this gives you some idea of what the Congressional Budget Office thinks. They look out to 2033, it's a bit further out, and they say the deficit goes high and goes up for a much longer time. Now let me talk a little bit about the rest of the world. The US is expected to grow sort of 2%-ish. That's actually a pretty decent result for developed economies. If you compare with the Eurozone, which is the smaller of the lines, they're expected over the years to grow between half and 2/3 as much. If you compare with Asia and Pacific, their growth by comparison is expected to be turbocharged. But you want to be just a wee bit careful about the Asia-Pacific numbers, because a fair proportion of their numbers are the official government numbers from China. And the Chinese produce their estimates of GDP for the quarter before the quarter's even come to an end. So you know that it's not an exact measurement, put it that way. So you want to be a bit careful about the numbers. I think the numbers in current circumstances are almost certainly exaggerated. We do our own cross-check by finding out how much they buy from everyone. And based on the data that they are buying, I'd say their growth currently, they say it's 5%, I'd say it's about 2.5%. However, if you're growing 2.5% in what are accepted to be difficult times, that's actually a bit of a result. So I wouldn't knock them too hard just for the fact that they're not growing 5%. We're not growing 5% either. So just be a bit careful about over-interpretation of this data. Now, this is a bit more interesting because this is showing emerging economies. And what it shows first of all Asia Pacific, which was on the previous graph, then it shows the Middle East, and then it shows Africa. And what it does show is that the fastest growing economic region is likely to be Africa. And most of the figures do seem to show that, turbocharged by strong population growth and by very, very cheap labor and by widespread education and starting from a low base, Africa is set to do pretty well looking into the future. So don't ignore Africa just because you say, well, the current levels of GDP are low. It is very much meant to be the coming place, and it has a demography in its favor. The Middle East is very dependent on the price of oil and whether they're knocking hell out of each other. And sadly, at the moment, they are knocking hell out of each other. So their growth, as you can see, for the short term, is depressed. This assumes that we get back to something closer to peace. And obviously, we keep our fingers crossed that that is what's going to happen. Now, let me turn to the UK and Ireland. This figure comes from a chart I put up somewhere else. And what it is trying to show is what is happening in the UK measured as GDP per capita. In other words, subtracting from the economic growth the pace of population growth. And we've been through a period of very rapid population growth where our rate of population growth has exceeded our economic growth. And as a result, GDP per capita is not only flatlining, but is below where it was pre-COVID. That's a real problem for us. We need to get that turned around. And how we do it is an interesting task. I'm not here to talk about policy, so I'm not going to give you my suggestions. But if anyone wants to talk to me in the bar and find out what I think, I'm very happy to reel off 14 points of plans of ways in which we can do this, which will bore you and send you to sleep. This compares our GDP per capita with that in the United States. And what you can see is that back in the first decade of this century, we actually overtook the Americans in GDP per capita, only for 1 year. And it was to do with exchange rates rather more than anything real. But still, we got past them once. Now we are down to 60%. And on some forecasts, we're going to be falling quite a bit further. So our growth, both in absolute terms and after taking population into account, is expected to be fairly sluggish. Now, we might do better than that, but we might not. We might do worse than that. My colleagues say inflation will be slow, low, and steady. I'm afraid that's what economists and many years of economics training tell you. If you've also, as well as being an economist for 50 years, run a business and been on company boards and things like that, you know that straight lines don't occur in nature, and they don't occur in inflation forecasts. It's not going to be like that. I would say all the risks are on the upside of this forecast. I can see all sorts of factors that will make inflation higher: higher national insurance, higher minimum wage, tariffs around the world, possibility of climate levies. That's just a few. And that's just the policy measures before you think of all the other things that could put. So I just came a doot. And by the way, are we going to have any farms left? So, we may have to be buying imported food from somewhere at rock high, stone high, whatever, very high prices. So my guess is inflation will be higher than this prediction. However, the young kids, that's what they think is going to happen. And, that's what their models say. And because it comes out of the computer, they believe it. Good for them. And this is what they're saying about interest rates. How many of you know interest rates got cut? Good. So you already got one. I'm not your first bit of economic news today. Anyway, they think they'll go down further. If inflation were to do what they think, interest rates would go that way. But obviously it does depend critically on inflation. And just remember, they missed the last spike in inflation. They took nearly 2 years to work out that it was real, by which stage it got way out of control. So don't assume they'll necessarily get it right next time. That would be breaking the precedent. What about the budget? Well, it's a 70 billion extra spend per annum, financed, according to the Office for Budget Responsibility, by 36 billion of extra taxes and 32 billion of extra borrowing. Tax rises on employers and on capital, on capital gains tax, inheritance tax, etc. The Growth Commission estimate, which I'm afraid I made myself, was it would reduce GDP per capita by 3.4% in 5 years' time. In other words, wipe out all the growth that's predicted. But it gets worse, because if that forecast is correct, and since I made it, you know it must be correct, if you don't get that growth, there's a hole, and this is a real black hole, not an invented one for political purposes, there's a hole in the budget of a further 50 billion of taxes they won't get because of the slower growth. So don't think you may just get away with only losing 3.5% of growth. It might be worse than that. And the credit card is maxed out. We've already, you know, we're paying more in the UK to borrow than they are in Greece. Now, Greece obviously is the paragon of economic efficiency and management. And we're paying a lot more than they are in Germany, although the German economy is in trouble, but financially they're still much less in trouble because they do actually pay their way rather than doing it on tick like we prefer to. So I'm afraid if you think that the tax rises are over, may I suggest to all of you, think again. And if you want to move your money abroad, don't say I told you to. What about Ireland? Well, Ireland, you can see that the cartoonist for this, I didn't do my own cartoons, someone from Enable did, and he decided that the appropriate cartoon for the Irish economy was a magic money tree. Well, isn't that wonderful? Unfortunately, his first attempt, the magic money tree was 2/3 of the slide, and the font got tiny. Anyway, they kindly reduced the size of the magic money tree. It's still there, you can see it. If you're Irish and you're worried about your magic money tree, don't worry, it's not gone away. And they made the font a bit bigger. And the Irish economy is a fascinating story. Well, if you're Irish, you will know this, but if you're not Irish, you may not. GDP per capita in Ireland is noticeably higher than in the UK. And even if you take out the foreign profits, it's still higher than in the UK. And the Irish economy is benefiting from all sorts of things. The current thing, of course, that has been hugely influential in attracting inward investment, particularly in capital-intensive areas like tech and like pharma, is 12.5% corporation tax. That's pretty damn attractive if you're running a very capital-intensive business for which corporation tax would otherwise be a major factor. But it's not just that. Ireland has still got a skilled population, heavily influenced by priests and nuns. I had them educate me too, and I know they beat it into you, but it is one way of making sure people learn. It's probably not the preferred route these days, but nevertheless, the Irish population is generally considered to be one of the best educated in the world. But it goes on from there. They're in the EU, they're in the single market, they speak English, and they've got this great supply, because remember that the pill only became legal in Ireland relatively recently compared with other places. So they have this huge labour supply, which they add to with migration. So the combination of these factors does make Ireland still an attractive place for investment. And I think we should assume that it will keep growing at least 2%. And it may do better than that. When I forecast Ireland economy growing at 2% in the past, it's always beaten my forecast. So it could easily do so again. Now, I've talked to you about the sort of instantaneous things, elections, budgets, and things like that. Let me say a little bit about some of the more important things, and sadly, the more worrying things. First of all, we've got wars around the world. Ukraine and the Middle East, they're still hot. Taiwan, it hasn't yet exploded yet, but the Chinese government has said it wants to reunite, in its words, China before 2027. Whether that will happen, I don't know. How they'll make it happen, I don't know. It is going to be a tough economic thing, because if they were to do so, I think particularly with Trump as president, they would certainly face something. But that is what the Chinese government have said they want to do. And they do have a record for doing what they say they're going to do. So that will be an issue. A debt crisis, I've talked about it already, but I see it as the biggest single economic threat. My guess is that if nothing happened to destabilize the world, people might just carry on the federal government issuing debt and the bond market buying debt. But the world ain't like that. Something happens, comes in from their side. Politics. Maybe Trump will suddenly halve taxes or something. Or some military situation will break out, or something like that, of a kind we economists aren't great at predicting. If something like that happens, just remember the intrinsic instability of having a huge pile of debt. If the bond market went on strike, that could be pretty catastrophic. Not just for the United States. In some ways, it's easier for the United States, because a lot of their spending is more discretionary. It's be much worse, for example, in Europe, where effectively governments are plugged in to their spending routines and would find it much harder to get out of them. I've got a separate slide on demographics, which I'd like to come back to. So let me move on to technology, inequality, and population transfers. Technology is still, well, you know it from your industry, is driving things. I was chief economist for IBM UK on the main board of Marconi and wrote the book, The Flat White Economy. So I'm sort of, people do consult me on this. Whether they get common sense, I've got no idea. But they keep coming back. So that may be useful. What I sense is that technology tends much more to happen drip, 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 and then suddenly you look back and you realize the world's completely changed. Everyone, if you look at the markets, if you look at the media, particular applications, particular technologies get hyped. In my sense, they're going on all along, and the wedge just gets bigger. And then there suddenly gets a point where, because everyone else is doing it, the rest have to pick it up. And at that point, the take-up curve can be vertical for a period. But I don't think technology changes in quite the way that the markets expect. The markets draw lines like that. It tends much more to be like this, and then there's an S-curve. And it comes off because there are tech illiterates who don't ever take up the tech, and they just have to wait until they're no longer active in business and so on. But I think tech is likely to be like that. One of the consequences of tech is I think it does encourage higher inequality. And I think higher inequality is going to be a feature of our lives. And those who are winners are going to find pressure from those who are losers, who will probably be the bulk of us, as we don't like the idea that all the assets in the world are held by a relatively small group of people. I mean, I wouldn't normally consider myself to be a radical, but on this issue I am, because I do actually think it's going to be something that will worry not just my generation, but future generations. The market system is a good system for allocating goods. What it's not a good system for is for distributing incomes. It doesn't work anything like as well for those. And I think we may get challenges to the market system on that basis. Let me turn back to population and the forecasts. Now, these are the United Nations medium-term population forecasts. Line 2 is probably the most dramatic one. China's population is 1.4 billion today, and is going to be, according to the UN, 633 million by the year 2001. In other words, it's going to fall by more than half. Now, that puts a level of desperation into Chinese policy, because effectively, China is either number one or becoming number one today because of the combination of a decent level of prosperity, but not a very high average level of prosperity, but a huge population. And when you multiply the two together, that's what's China's strength. If the population is halved, then it is going to be a tough act to get the prosperity to increase at a sufficient rate to sustain the position. So that, I think, is the challenge. India is going to be by far the world's most populous nation. It is already just. It is forecast to be by a margin. The United States is also expected to grow. If you look down, have a look at Japan, where its population is also collapsing. If you look in Europe, if you believe the UN forecast, the populations of France and Spain and Poland are all forecast roughly to halve from their current levels by the end of this century. The UK population is expected to exceed that of Germany and nearly to catch up with that of Japan. Now, whether these are true, I don't know. I suspect they haven't really taken account properly of migration. Because what drives migration is income differences. And the richer countries attract population from the poorer countries. It used to be the other way around, that people from rich countries went to poor countries to exploit them. Now it goes the other. Now instead, it's people from poor countries coming to rich countries, not necessarily to exploit them, but at any rate to seek a better life. So it's a different world, really. So very quickly, what does all this mean? The US could do well, but it's an unstable situation, and you could see things that might suddenly mean it falls off a cliff. But the central forecast is it'd be okay. UK and EU, much less exciting, much more sluggish growth. Emerging markets doing noticeably better, but worry about wars and trade wars and their impact on growth and whether they will eventually pull the plug out of the bath. Now, I did say in the title I would say something about the impact of rebate management. I'm going to throw in two thoughts. First, if I'm right that inflation is going to be a bit more, then that confuses rebate management. And moreover, since the rebate typically is paid after the initial payment, the value of the rebate may change. That's something I think that you would need to take into account in strategizing. The second is that it is a sort of typical thing in the economy that price sensitivity is higher when the economy is weaker. Now, mixing that with rebate strategy is much more complicated because rebate strategy has its own built-in dynamics and so on. I'm not the expert. You guys are the experts, so you will have to work that out. But I think what it is saying is rebates, they're important all the time. They may be even more important as we go forward. So thank you so much for paying attention. Not one of you has shut your eyes. Not one of you has even taken your watch out to see if it's stopped. So thank you very, very much indeed. And I'm delighted to take questions. I think we've got about 10 minutes. The acoustics here are good, so you... so thank you.
How does the rise of the BRICS trading bloc fit into this, especially with regards to commodities, energy, US treasuries, so on?
I don't think of the BRICS as a trading bloc. It was coined by a friend of mine, Jim O'Neill. And he liked the fact that you could get things that could be turned into a simple word, BRICS. So he called them that. But they are actually very, very different types of places. And although they meet politically, and that's partly an attempt to differentiate themselves, and Russia and China especially are now joined at the hip in trading terms. I'd say the rest of the BRICS, on the whole, play it both ways. The rest of the BRICS are not really a trading bloc as such. What they are instead are people who try not to accept the hegemony of the West. They see the West as a declining power or a declining series of powers, which we are probably. And therefore, they want the opportunity to play us all off against each other. And that's particularly the case for India. India will be the world's largest economy within this century. It's pretty hard to see circumstances that could prevent that from happening, except instability within the country. And the Indians see no need to be either aligned with China or aligned with the United States. They say it's up for the rest of you to be aligned with India. And from their point of view, I think what they say makes a lot of sense. If you want to understand India's diplomatic behavior as it becomes dominant in the world economy, it's not a silly thing to study the world of cricket. India is responsible for 90% of all revenues in cricket. The IPL alone is responsible for about 2/3 of that. So India basically is the only revenue earner that really counts in cricket. And yet they can't quite run the whole thing. Because the thing about cricket is you need someone to play against. So there's an interesting balance. But you have this sort of bizarre situation that about 3 England tours to India ago, even while India is this massive financial powerhouse, and India then was about 80% of world revenues in cricket. Nevertheless, the Indian Cricket Board had had its assets frozen by a judge. So the England players, whenever they wanted a meal, they had to phone a judge to allow the credit card spending on a meal. So at one level, you have something so financially sophisticated and rich it dominates everything. Another, the troops don't all march at the same pace. You've got something that's sort of so ramshackle that they need a judge to authorize every time they want to put the credit card in the slot. If you think about that, that probably sums it up, that we'll get a mix of first world and third world behavior for a very long time. Eventually, it will all catch up, I'm sure. But there will be an interesting period in between when things are sort of slightly odd and don't quite happen in the way one might imagine. But I don't really think of the BRICS as a single entity for most purposes. Now, if you want to read about Russia and China, I don't know if any of you have seen the Bentley parked outside the front of this hotel. But in 2019, I took that Bentley on the Peking to Paris endurance rally. You start in Beijing, and then you have a proper start by the Great Wall. And you drive all the way across. And the reason I wanted to do it was to see how the Belt and Road Initiative was changing the relationships as you went through from Asia through to Europe? And the answer is it's really transformed. Compared with people who'd done it earlier, they said that the number of lorries going between China and Russia had multiplied about 4 times. I mean, that is the big change. China and Russia are much more joined at the hip. I wrote this book about it, Driving the Silk Road. It's available on Amazon. Special price for you, etc., 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 etc. It's more about a drive and 2 brothers trying to stop fighting. But the economic story is Russia and China and how the 2 of them are changing, and they're becoming effectively joined at the hip. Next question.
Hi. Yeah, I can't resist a Trump question. Apologies. It seems very current this week. He said he's going to fulfill all of his promises when he was guaranteed as president. You've already called out he's very big on tariffs. He's definitely going to have to push tariffs up. But he also said a couple of weeks ago he is going to end inflation in his very simplistic way that he does. Is that possible when you're hugely taxing imports? And is it a good thing to try to end inflation, as he put it?
Well, Trump's an interesting character. He was described by the head of the Bundestag Foreign Affairs Committee. I can't get the German right, I'm sorry, but it sounded really nasty until I went to a dictionary and translated it. And what it said is unpredictable. And put it this way, just because Trump said something doesn't automatically mean it's true. I mean, he said he didn't pay hush money to Stormy Daniels. And his intention, his promise to end inflation may be somewhere in that kind of category. Would it be a good thing? I would think a small inflation, something slightly positive, isn't a bad thing. And also it tends to compensate for the fact that there are unmeasured quality changes taking place all the time, which probably mean if inflation is running at about 1.5%, it's really 0 once you take account of quality improvements that tend to be happening all the time. What I would be worried about is if Trump decided to sit on the Fed. Now, I don't believe the Fed has been perfect. I mean, the monetary movements of the last few years are pretty good evidence that they're not exactly competent. But the one thing that I think would be worse than the Fed Board of Governors running counter-inflationary policy would be Trump running counter-inflationary policy. Because I cannot believe that he could possibly resist spending money and blowing it or putting it all on red, basically trying to blow everything up while he's in office at the expense of something pretty awful after 4 years. That's obviously assuming that he decides not to rescind the act that says you can't be president for more than 8 years in total. But I'm working on the assumption that he may not manage to change that. So I don't believe it. He's going to put up prices through various means. There are a couple of things he might do that might reduce prices. The first is if Musk, even say he doesn't cut the federal bureaucracy by 80%, if he cut it by 20%, that would be a great result, actually. And that might bring down prices a bit. And the second thing is he is trying to get out of the various wars that the US is partially involved in. And if that led to greater supplies of energy and so on, that could bring down inflation. I suppose there's one other thing, which is we'll all have different views on net zero. But I think most of us would accept that net zero has a cost. And if we let the world get warmer, but do not spend on anti-global warming measures, that also reduces inflation. So there are some counter-inflation things there, but on the whole, I wouldn't entirely believe that he will achieve that result. We've got time for one question, and I'll have to give a quick answer. Anyone brave? I think you're all hungry. No, you're looking for Mark. You're really excited about the fact that he's about to come on. Thank you so much for paying attention, and good luck and enjoy it. And I hope you learned something from not just me, but from everyone here today. Thank you very much indeed.